is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hey there, it's Alex. We're about to launch into the episode of DeFi Decoded from this week, but I just wanted to give you a heads up. The episode was recorded on Wednesday, October 9th. Today is Thursday, October 10th. By the time you're listening to it, it may be Friday, October 11th. So some things have changed in the meantime, nothing major, but we did get a slightly hotter than expected inflation print on Wednesday. And we also saw some labor data that came out of the US that showed more unemployment claims than had been expected. The market overall is down just a little bit, but the conversation didn't happen to touch on those two things. Still, it was much more far-reaching. There's a lot more here than what happens, day to day, week to week. And we're looking, into the end of the year, what's coming up, big catalysts related to the election, to the unwinding of the FTX situation, and some of the money being returned there, plus some much more big picture ideas here. So please tune in. We're looking forward to having you. And here comes the show. Hello and welcome back to another episode of DeFi Decoded, and happy Uptober, or so far Flattober. I am Alex Tapscott with co-host Andrew Young. Andrew, wake me up when September ends. That's what they say, at least. And October apparently is supposed to be better for crypto assets. But so far it's been a little bit choppy. There's a lot of talk about several upcoming catalysts that should kickstart, another round of excitement and interest in the asset class and in the technology. We saw recently that a judge approved the plan by the FTX executor to basically return cash plus interest to people who are affected by the collapse of the exchange. Looks like they'll be getting about $1.20 on every dollar, which I think is going to have some impact on the market. It's being paid in cash, which is different from what we saw earlier in the year with Mt. Gox. So instead of people getting crypto, which they may decide to sell, they're going to get cash, which they may decide to buy. We'll see. At the same time, there's a lot of stuff going on in the macro environment. We talked, I think, on the last show about rate cuts from the Fed and that cycle. But then more recently, we got a jobs report that shows that maybe the economy is not slowing down so much. And now everyone's talking about the no landing scenario. You've heard of the hard landing, the soft landing. Well, the no landing is basically an environment where the economy doesn't go into correction territory. Things keep humming along. And maybe as a result, inflation kicks up and rates don't get cut. So where does that leave risk assets? Is a good economy where things are going well good for Bitcoin and other cryptos, or is it bad? I don't know. We should talk about that. You got the election, obviously, which is right around the corner. We spent a lot of time on that topic and happy to revisit it here. And then there's a whole bunch of stuff that's actually happening within the world of Web3, both on the sort of crypto Twitter, tail end, and then also within the enterprise and business end, which we're going to dive into as well. So kind of a full slate to get into. Why don't we just kick it off right now with the market? Uptober hasn't manifested yet. Are we still in for another leg of the bull market? Talk to me.
Yeah, I think so. I think the next 6 to 12 months should be really good. Potentially, I think we even get into kind of like sort of nutty territory. Maybe not in the next 3-4 months, but I think kind of in the new year. I think things are just perfectly lined up for that. I also think so. Like you said, a couple things. One, obviously rate cuts, liquidity cycle is starting to turn. That's incredible for crypto as like a long tail asset. So that's number one. Number two is exactly like you said, we have a very clear short-term catalyst in the sense that we have the FTX money coming back, which will almost certainly be some portion of it at least will be plowed back into the market. And then finally, I just think the market is kind of like sentiment is relatively low, but people are kind of ready for, I don't know how to phrase this. Like, I don't think there's too much froth in the market right now. I think there's a lot of projects, particularly sort of in the altcoin space, that are trading at really good valuations.
Good meaning like attractive, or good meaning high?
sorry, like attractive valuations.
Yeah.
And we don't have the same, I would say, like the overhang of projects, high FTV, low float. I would say there's not as many of them coming to market just because the market's been relatively poor. So there's less of a supply of like multi-billion-dollar floats that the market has to churn through.
Interesting.
So, I mean, those will also come online soon. But like, for example, Eigenlayer, which is the, essentially Ethereum restaking project, it came out with a relatively poor, relatively disappointing launch. I think it was like, let me just check. It's like $2 or $3 billion FTV, which seems really high, but it's actually way below estimates. Most people had it coming in at like $10 billion plus. So I just think like the market is just, these things have been kind of taken to the woodshed to a certain extent. Actually, I should say it's actually still a $6 billion FTV. But still, most people had it pegged in like the 10 to 15 territory. It's actually trading at a fraction of its TVL. It has 10.5 billion in TVL. So I would just say the market is relatively fairly, I wouldn't say, maybe not fairly priced, but you're not seeing the crazy froth that you've seen in past cycles. And meme coins have been doing really well, but even there, only a couple of memes have really gotten back to their highs from February, March. A lot of memes have just been kind of taken to the woodshed as well. And so there's obviously more and more meme coins coming out every day. But I would say like the space looks primed based on like, this is, I guess, my third bull market cycle. But it just seems like it seems like everything's ready for a pretty big lift off over the next 6 to 12 months. And so, should be interesting. I don't know. What do you think?
Yeah, I think so. I mean, like let's look at what happened in the summertime. So in the summertime, the Mt. Gox creditors received their funds back, or started to receive their funds back, and that amount was from the $9 billion range. And I think that it's kind of remarkable how easily those funds were absorbed into the market. We hit an all-time high before that, but even still, like, most of that money was paid out in Bitcoin. Bitcoin is at $64,000, $63,000. It's really not that far from its all-time high. And actually, it's had a remarkable staying power where it's really sort of created this like strong base of support sort of between $50,000 and $60,000. And now we're looking at this FTX situation, which according to news reports, could be anywhere between $14 and $16.5 billion. The difference, though, is that it's not Bitcoin hitting the market; it's cash that's being put into users' hands. Yeah, so maybe some people are thinking, I got bit by the crypto bug in the last cycle. I bought some stuff, and then the exchange went under. Like that serves me right. Maybe I won't get back into it. But you and I know better than that. That there are lots of people who are customers of FTX. They're also customers of lots of other exchanges, and they're about to get a windfall. And their view of the market and the asset class is completely unchanged. And so as a result, I think that there's going to be huge incremental buying from that money that hits the market. And that, more than anything else, is like the big catalyst to look for this fall. In terms of the macro picture, like, whether the rate cuts happen slower or faster than, consensus, they're still going to get cut. And that's going to act as a tailwind for risk assets. It's like, this is a don't overthink it kind of situation. Monetary conditions are easing. More cash is entering the system. You've seen Federal Reserve members talking about the need to cut rates, how the risk is more to the job market and less to the inflation side, which means more cuts. And also talking about how, as part of that, there's no intention to ever bring the balance sheet for the Federal Reserve back to sort of pre-COVID levels. That's what Neil Kashkari said, who's one of the Fed board governors. So Minnesota Fed. So in other words, like the conditions, they're telling you that it's going to get looser. You've got fresh cash that's going to hit the market here. A lot of that will get recycled into other kinds of assets. You've got stimulus in China, which for the first time is putting a bid under Chinese risk assets. And anybody who's in this industry knows that Asia is one of the main sources of buying and liquidity in crypto. And then you've got the election, which, as we've discussed on the show, I think, regardless of the outcome, is a positive catalyst
Yeah, I agree
because
with that.
it signifies an end of an era that I think some people have felt has not been all that kind to crypto,
Oh,
and in the
some people,
beginning of something, new. I'm, being diplomatic, but the beginning of something new. And what the industry's done successfully is make this an election issue where both sides, one more than other, but both sides have changed their tone and their point of view. And that's, not just because of lobbying by companies that have deep pockets. It's because they're hearing it from constituents. There's been data that shows that, 1 in 4, I need to get the exact numbers. We've quoted it before in the show, but basically, there's a huge percentage of the population that owns the asset class, and that many of them are single issue voters, and that many of them, could be decisive in swing states. So we'll pull that data, put it in the show notes because I don't want to misquote it. But there's lots of data that supports this as well. So it's not just coming from, this isn't astroturfing by companies. This is grassroots coming from individual voters. And so it's like, so what's the downside? So what could go wrong, I guess? Well, I think that, the most compelling thing that you've said to me, and you say lots of smart things, but the thing that's always stuck with me is this idea of like token diffusion, that there's basically just so many new assets hitting the market that you've got, fixed amount of money or sort of a slowly growing amount of risk capital chasing an ever expanding universe of assets. And that in previous cycles, a lot of the money was chasing, application layer projects, or was chasing NFT projects, or was chasing layer ones, the alt layer one thesis. And now there's meme coins which are vying for attention, maybe like on the margin, that is taking that could absorb a lot of the money. And you know what, like people can trade meme coins and they can go up and down in value, but only a couple of them will ever actually like have staying power. This is something we know from experience, right? There's Dogecoin, there's Shiba, there's Dog with Hat, and after that it starts to drop off a lot. You could argue like Litecoin and XRP, and those names are also kind of in the meme coin category. But that's the one thing that worries me a little bit. And you've got a point of view on meme coins. This has been a big theme actually on Twitter. So I've kind of made the case for why things are looking good. You've got a favorable macro backdrop, favorable political backdrop. You've got fresh capital hitting the market, and things that people know that I like to talk about. You got lots of examples of big companies and other use cases for the technology. Visa just, for example, launched its token platform built on Ethereum. So, that's probably good for ETH, right? So there's all this stuff happening, but then there's this other stuff as well. So talk about the meme coin trend that's going on right now.
Yeah, and just before real quick, I totally agree on the election. I think it's now come out actually that if Kamala were to win, she would almost certainly replace Gensler at the SEC with someone potentially more favorable to crypto. There was rumors that I think his name Dan Gallagher, who's the chief legal officer at Robinhood, who's actually being sued by the SEC right now for alleged crypto violations, would be actually one of the names that she could tap. So obviously a lot of like pro crypto sentiments you're starting to see. I mean, on crypto Twitter, if you bring up anything about that though, people attack you because I would say the crypto crowd is extremely pro-Trump at this point. So
you know what? It's not. So this is the most interesting. Crypto Twitter is pro-Trump. Like crypto, there was a recent survey that was done that's basically like 50-50, which like is broadly representative of the electorate as a whole. And there are certain people who I think are just shameless in how much they support Donald Trump, and that's skewing the perception of the industry.
Yeah, I think part of it is that the crypto crowd doesn't believe that the Democrats have actually made a pivot on crypto. I think they've made like a soft pivot, but still, I think the one last thing I just want to flag on this before we move on though is I think even if it looks like even if the Democrats win the presidency, it seems very unlikely that they'll win the Senate. So historically, what's been Goldilocks for the market is actually gridlock. So
Paralysis.
yeah, paralysis. So if Kamala wins, but then they don't win the Senate, then a lot of the what are seen as huge downsides to a potential Kamala administration in terms of higher taxes, all these types of things, those are essentially dead in the water and won't be able to pass. But then you obviously have the less chance of tariffs and some of the sort of negative things that Trump has proposed, which I think are easier to do through executive order than what a lot of Kamala's is trying to push through. Right. So there's kind of a Goldilocks scenario where Kamala wins the presidency, but then you have the Republicans win Senate, and you have essentially just gridlock. Obviously, if Trump wins, then I think probably the best scenario for crypto is Trump wins, but there is no. It's also gridlock, so maybe the Democrats win the House, just because then you have lighter touch regulation, less hostile sort of administrative state, but then you less ability to push through some of the tariffs and inflation, high things that will cause inflation, which would then obviously push up interest rates, which hurts cryptos. So I don't know. We'll sort of see, but I think you're exactly right. I think pretty much no matter what, the markets will be up post election. The only scenario where I don't think they'll be up is if we have an incredibly tight election and then Pennsylvania takes weeks to figure out their vote count, which could easily happen. You have a scenario where Trump wins Georgia, Arizona, North Carolina, and Kamala wins Michigan and Wisconsin, and then essentially whoever wins Pennsylvania wins the election. And Pennsylvania historically has a lot of trouble counting votes. It takes them weeks to kind of come on a final vote count. So
this is a deeper level of political analysis than I thought. We're getting into vote counting at the state level. But I think you're right. A scenario, what people are in search of is clarity. And a contested election or one where there's counting and all that nonsense creates uncertainty. And then that, prevents us from getting past into the next era, right? Whatever that era might look like.
Yeah. So thankfully, they also didn't, not to go overly into the weeds, but thankfully the Republicans weren't able to do this electoral reform in Nebraska, which would have essentially made Nebraska an all or nothing state for their 4 electoral votes. So instead, the electoral votes are split. The reason why that mattered is that if they actually did pass that reform, it would have radically increased the chances of a tie, because if Trump had won the Sunbelt swing states, which is pretty much where he's leading the most, so that's Nevada, Arizona, Georgia, and North Carolina, and then Kamala held the blue wall, you actually would have had a 269 tie. Now in this scenario, Kamala would actually win with exactly 270. So because the 269 would take literally months, I think it's weeks to months to resolve, and probably would have ended up meaning the Republicans win just based on how they did it. But that's been averted. So I think that the chances of a tie are dramatically lower now. I actually think, again, we can come out with a full political prediction, but I think it's pretty likely that the election actually won't be that close. I think in the last kind of week, you'll see a swing one way or the other. And I think all 3 of the blue wall states will vote one way or the other. So, yeah, it just historically.
If the blue wall votes Democrat and the Sun Belt goes Republican, then we end up in this extremely tight situation, right, where the Democrats maybe squeak by. But if they all go one side, then it's a sweep, right? It's
I just think even if the 3 go Democrat, then I think that means that Kamala will also win Georgia, maybe North Carolina, and Nevada. Whereas I think if Trump wins Pennsylvania, then he almost certainly will win also all the Sun Belt states. But then I also think he'll end up winning Michigan and Wisconsin too. So I think you'll just they're a lot more correlated than people realize, and so I think it's just going to swing one way or the other. And I actually think whoever wins will breach 300 electoral votes. But that's my 1 month away election prediction based on just following the prediction markets and going into the weeds on all that.
What are the prediction markets saying right now? It's
So
kind of a coin flip, a little tilting more towards Trump, right? A little bit more recently.
yeah, the election markets are now almost, it's like 54-46 Trump. The main reason there is Kamala is only leading by about 2% nationally, which is quite low. So historically, the Democrats have to win by about 3% plus nationally to win the election, just because they rack up so many extra votes in New York and California that essentially are kind of wasted. So one, she's only winning by 2 points there. Historically, Trump has outperformed his polls in the 2016 and 2020 election. I know people point to the 2022 midterms as evidence that sometimes the Republicans underperform their polls, but Trump was obviously not on the ballot in that election. In the two presidential elections, Trump outperformed by, I believe it was 8% and 4%, something like that. For example, this time during the 2020 election, Biden was up, I think, 8 or 9% in the polls, whereas Kamala's only up 2. And the 2020 election was incredibly close. So, maybe the polling error will be a lot less this time around because Trump's more of a known commodity. It's less there's less taboo to say you support him. But even still, even just a 2% win wouldn't really likely the Democrats wouldn't win. And then also finally, there's been a bunch of polls showing Trump's doing better in Pennsylvania than expected. And so, as well as Georgia and North Carolina. So that's his easiest path to 270 is just winning Georgia, North Carolina, Pennsylvania. I'm pretty sure he doesn't have to win any of the other swing states to still win.
Yeah.
So, and he's also about a 15% plus favorite right now in Pennsylvania. So, we shall see. We shall see.
We shall see. Wow, that was pretty deep. I don't think I've heard such a deep level of analysis. This is a combination of being plugged into the mainstream media, the non-mainstream media, and also prediction markets as a way to inform your point of view, right? It's a reminder. I actually wrote an op-ed about prediction markets for Fortune magazine a couple months ago, right around the time that that Biden was being considered as when the party was considering replacing him as the candidate, and how prediction markets had Biden going into it, into the debate, 25% dropping out, which seemed crazy. If you'd asked the pundits, if they thought what the odds were, they would have said near zero. And as things progressed from there, the odds increased quite a lot. It was pricing in real time the actual risk of this, and as a result, not as a result of the prediction markets, but in a way the prediction markets anticipated and some might say helped to tilt things, right? Because a lot of people are looking at prediction markets. If you're an insider of the Democratic Party and 90% of people think your candidate is going to be replaced, that almost gives you cover to push for it yourself, right? So I actually think that we're seeing the prediction markets both becoming the news in the sense that people are quoting it. It's part of information that's informing opinion, but also maybe influencing as well, right? Because it's become such a powerful force in this election.
Yeah.
So this was sort of your description of it was a reminder of just how how mainstream and how important this data that's being gathered by platforms that are crypto native has been to thinking about and understanding this election cycle. So we've got a little bit of time left. You wanted to talk about the meme coin phenomenon. So we talked earlier in the year about meme coins. This was maybe around the time that the Solana meme coin cycle was really kicking into high gear. There was Pump.Fun, which is obviously still around, and some of these other coins, had gone to the moon. And a lot of those things are doing pretty poorly. Political meme coins for candidates, that was a thing briefly. Those have basically all gone to zero. A lot of other things have gone to zero. So Andrew, what do we want to talk about here? Meme coins that get pumped and some people make money and then everybody loses everything, or is there something deeper going on here?
Yeah, I mean, again, I come from the altcoin world where I still prefer coins to have some sort of yield and B, some sort of actual use case that drives the yield. You know what I mean? Essentially an on-chain decentralized business, which to me is essentially what Ethereum is. And then it pays out 100% of its protocol revenue to stakers, and that's where the staking yield comes from. So yeah, definitely definitely class of 2017 crypto boomer when it comes to my preference, but the thing is like that type of investing style hasn't done well over the last year. So I'm definitely open to whereas like the small sort of very small purchases into different meme coins that I just thought were funny have done incredibly well. So trying to be open-minded to the Memecoin Supercycle, which is the term that this crypto trader named Murad, who's really big on crypto Twitter right now, he is essentially like created. And so the Memecoin Supercycle is essentially it's essentially a counter thesis that was created because of how because of the sort of low float, high FTV phenomenon. So what I mean by that is over the years, a lot of like VC backed projects have launched with really low floats. So like, billion tokens, but only 5% of the tokens are available on day one. And those are, maybe only 5% to 10% are available to users of the project, the actual community. And the other 90% are held by the team and VCs and whatnot. And that sort of goes against the whole ethos of building like a decentralized community-driven business or project. And so over the years, the market, one is those projects have done very poorly price performance wise. And so it's driven this like essentially lack of interest into these like, into essentially what are traditionally called altcoins. And led to a lot of skepticism. And so meme coins have essentially filled the role, and then also partly due to regulations, because regulations make it harder for US-based teams to have projects that pay out like revenue to token holders. So those two sort of things combined have led to a huge skepticism of traditional crypto project tokens. And so essentially what's happened is all that interest, and then on top of that, NFTs kind of died. And so all the interest from like NFTs and altcoins this cycle is mostly focused on meme coins. So the reason why meme coins are interesting, I'm giving you the bull thesis, is they're fully community driven. So they're typically fair launched with very little amount of tokens for like the founders or anyone else. So everyone gets to effectively be an insider on day one, if you want. And then two is they, this part is a bit more absurd, but because there's no like product or sort of underlying tether to like a business, in a way their valuation and the narrative around the project can be pulled in so many different directions. It's kind of like you can make a meme coin into whatever you want it to be. Yeah. And so that's kind of and it also allows you to build like effectively, as Murad says, like a cult around a project, around a specific, whatever the theme of the meme coin is. And so, so those are kind of like the main things, reason why meme coins have been super bullish. Because like essentially in a way, like there's uncapped upside, I guess, because there's no underlying business. My counter
that is that, that's quite a spin.
I mean, that
well, the old fashioned.
There's also no it's uncapped downside because there's no business that provides the floor on the fundamental value. So, and then finally, the last thing that Murad has been sort of promoting, just to kind of round it all out. He's essentially, he says he's got a barbell strategy. So what that means is he owns a ton of Bitcoin because he believes in Bitcoin as like, essentially the most liquid, most established crypto asset. Yeah. But then he essentially skips over owning A, altcoins, but then also B, established layer ones like Ethereum and Solana. And the reason why is he's like, meme coins are going to drive this cycle. I'll just own the meme coins for like the high beta portion of my portfolio, because the meme coins, I guess if you pick the right ones, they're higher beta, so they'll inherently outperform Solana or like more established layer ones, just in an upcycle. I mean, they obviously can go to zero pretty fast too, so that's the downside. But Anyways, that's hopefully I did it justice, but that's kind of the Memecoin Supercycle thesis. There's actually more to it as well, but I don't know if what your take is on it as well.
I don't really know what my take is, other than I think that in a theoretical sense, any asset, if it gathers enough steam, can create a community that has it last for a long time. And, you could make the case that that's true for, the made up thing we call fiat money or gold. Like, why is gold valuable? Because everyone agrees to it. Why is Bitcoin valuable? Because it's the longest lasting, most secure, largest network, but it's got this meme value. So like theoretically, I guess there's sort of in a general sense, this is true. The practical reality of this is that there will be hundreds of meme coin launches. The vast majority of them will go to zero. The people who will hold these things are retail investors who are looking to get rich quick and be part of the next big thing. And in the end, they're going to end up worse off than they were before. I just can't imagine a scenario where that isn't the case in the aggregate. Individually, are there potentials for big wins, and is there potential for certain assets to do extremely well? Sure. But overall, the idea that things can be more valuable because they have less inherent value, to me, is not a compelling pitch. That's my point of view. This guy will probably make a lot of money in this cycle, and good on him. But I just don't see it, quite as much. The barbell strategy is interesting too, though, in the sense that you do own, within the crypto asset world, you own the sort of stable large cap one, and then you do try to identify the next trend. And there have been prior trends where we've seen, certain assets really outperform, whether it was like DeFi applications or individual NFT projects did really well or what have you. So I see the inherent value of that from like a trading investment standpoint. But that's something that, like, if that's not a buy and hold strategy for the next 10 years, that's something he's going to probably plan to trade around, in the coming months would be my guess. But I don't know enough about it. Yeah, okay, well, interesting. Again, like, I'm revealing myself as just a boomer, but that's my point of view and I'm sticking to it. I don't think there's anything else to cover today, Andrew. That was a very good conversation. Covered a lot of ground, really interesting stuff. I know there's a lot of really exciting things happening in your world with SX around prediction markets. We alluded to that a little bit. And I think the time has come to do a deep dive on this segment of the market. It's really the thing, in my view, that is the killer consumer application of this cycle, right? And it just so happens that one of the two longest running, largest and most useful prediction markets in the world was founded by you, co-host of the show. So at some point, we're going to have to really dig into that because I know there's a lot of interest in the topic. But until next week, that's it for DeFi Decoded. I'm Alex Tapscott here with Andrew Young. Please do check out the pod, give it a follow on YouTube or LinkedIn, on Spotify, wherever you get your podcast. Like it, review it, share it with friends. Just try to get the word out. Thanks a lot. Until next time, take care.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.